Hello everyone and welcome back to my third video about candlestick chart. Now in our first video we talked about the structure of candles and different types of candles. In our second video we talked about reversal patterns, and here we are today we're going to be talking about continuation pattern. Now what are continuation patterns? They are patterns that you see that basically indicate that the trend is going to keep going. So as always, we have two different types. We have a bullish pattern, we have a bearish pattern, sorry, and they're going to be divided into three categories as always: strong, reliable, and weak. The strong indicates a strong pattern that there's a strong signal that the trend will continue. Reliable is reliable, and weak is weak. All right, let's start with the strong. If we go over here, we have four main patterns for the strong continuation patterns. The first one is called the writhing three method. Now, this basically indicates that we have an uptrend like this, the trend is going up, and we see a big bullish candle. And then we see a few spinning tops, then another big bullish candle. And this is basically what the writhing three method is. It's basically you see it in an uptrend or a downtrend, which is the falling three method. We're going to talk about this in a second. You start with a big bullish candle, then a few spinning tops in the middle, then another big bullish candle. Now, if you don't remember what a spinning top is basically a candle with a very small body. Now, the falling three method is basically the opposite of the rising three method. So we have a downtrend like this, and we start with a big here, bearish candle. Okay, then a few spinning top, then another bearish candle. This basically indicates that the trend will continue to go down, and here the trend will continue to go up. Now we have deliberation. Deliberation basically means it's like a confirmation about for the trend. So let's say we are having like this an uptrend, okay, and we see like bullish candle, a doji. Then we see three bullish candle right after another, but they're getting smaller. Notice how the first one is big, the second one is a little bit smaller, then the third one is like a spinning top. This basically indicates that the market is actually having a strong bullish trend, and the trend most likely will continue to go up. Now, the last strong pattern we need to know here is called canceling baby swallow. So, what is this pattern? Basically, we have a downtrend like this. Notice how in equilibrium we have an uptrend, all bullish candle. Now, for here, we have a downtrend. Notice how we have black candle, a doji. Then we have four candles that are bearish. But notice one thing here: there are no wicks here. The shadows, you see these lines here? There are none of here. There's only one here, which basically indicate how the buyers are actually trying to bring the market up, but they couldn't because the market actually closed on a bearish candle. This basically indicates that the bears are having a tight grip over the market. They are in control. They're not going to let over. They want the trend to continue, and the bulls. There's nothing they can do about it, basically. And most likely, the trend will keep dropping like this. Now, let's talk about the reliable patterns. Now we have six of them. The first one is called separating line, and there's two different types of separating line. There's the bullish kind and there's the bearish kind. Okay, so the bullish kind basically we have an uptrend as we can see here. Then we start with a bearish candle here. The pattern starts with a bearish candle, but notice there's like the next candle starts at the end of the first candle. So like if we form a line right here, yeah. So this candle ended and this candle started. And this is what we call the separating line. So most likely the market will go up after this pattern because it is reliable. It's an okay signal. It's not very strong, but it's actually good. It helps us understand how the market is actually moving right now. Now the separating line in bearish is basically the opposite. Notice how the market is going down like this. The first candle, like I said here, is going to be bearish then bullish. Here it's going to be bullish then bearish. And the same thing here, if we put a line between them, so the second candle started where the first candle ended. Okay? And this basically indicates that the market will continue on its movement down. Now, the second pattern is called matching high and matching low. Matching high is a bullish candle. Matching low is a bearish pattern. So we have an uptrend like this. Then we have two candles that are actually look at the line here. See how they're both actually closed at the same place with a seller wick. So like the sellers, the bears basically are trying to bring down the market, but they couldn't. The bulls are still in control, and this is what we call a matching high because they're matching like where they actually closed, and this basically indicates that the market will go up. Matching low is the opposite. We have a downtrend like this, and notice how these candles are actually closing in the same place, and they're like in a matching place. If we put a line like this, yep, you'll be able to see it. This basically indicates that the market will keep on going down. Now, the upside to Saki gap. Now you gotta remember when you see gaps in candlestick, most of the time it means continuation pattern. So let's talk about the upside to Saki gap. The upside to Saki gap we have in an uptrend. So let's say the trend is going up. We start with a bullish candle. Then we have a gap here. This is where the gap is. Let me show you if I put this to this one. So this is the gap basically, okay? So we have another after a gap, another bullish candle, then a bearish candle. Okay, this basically indicates that the market will keep on going up. The downside to Saki gap is the same thing. We have a downtrend like this, it's going down, then notice the gap here, another bearish candle, then a bullish candle, then the market will most likely be dropping after that, like that. Now let's talk about our last part, which is the weak pattern here. So we have 6 of them. The first one is called advanced block. Okay, advanced block is basically we're having an uptrend like this. Okay, then we see 3 different candles that are all, of course, bullish. Notice how all the trend is right now is bullish. We also have a doji here. So this basically indicates, notice how the first one is actually, sorry, big, then small, then small. This basically indicates that the buyers are losing actually strength. Like the sellers could be actually making some kind of pressure on changing the trend. But like I said, this is a very weak pattern. So like the chances of this pattern actually working is about 10 to 15%, something like that. But if it did happen, that would basically mean that the market will go up because notice how we have a strong bullish trend. So we're not talking about the pattern itself, but the trend itself. So the trend is actually bullish and it's going up. So you might have in this type of pattern, you might see some kind of correction. So like when the market actually goes down a little bit, then it goes back up again. Okay. So a stick sandwich. Stick sandwich is basically 3 different candles, a 3-day candlestick pattern. Now you guys remember when I talked about in our last video, each candle represent 1 day. If you're looking at a daily chart, okay, daily chart represent 1 day, 1 candle. This one is a 3-day candlestick pattern. Notice how we have a downtrend like this, and we start with a strong a bearish candle, then a bullish candle with no wicks at all, then another bearish candle that is bigger than this one. Now, this basically is a very weak pattern. The market could go down after after this pattern, but notice here if you remember from our last video, we talked about bullish and bearish engulfing. How we technically here have an engulfing pattern, and it's a bearish engulfing pattern. So this could actually help you understand that the market could actually go down because it's bearish and the trend is already in bearish mode. So you got to understand how to combine different patterns together to understand the movement of the market. Now, the next pattern is called side-by-side white lines. And we have 2 different types of it. We have a bearish candle and we have a bullish candle. Let's start with the bullish candle. We have an uptrend that's going up. And notice how we start with a bullish candle. Then we have a gap. Now, this is basically part of the Tusaki gap family. Like there's different patterns there, and this is like a part of them. Now, notice here this gap here. After this gap, we have 2 candles that are white or green. They're basically bullish. And this basically indicates that the market has a good chance of actually continuing this trend. So after this, you will see the trend go up. Now, side by side white line in a bearish trend, you see it like this. So we have a bearish trend that's going down, The first candle is going to be bearish. Okay, notice how this one it's going to be it was bullish, and here it's going to be bearish. Then we have a gap here. Then we have two white lines, which is basically our two white candles or two green candles. And this also indicates that the market will go down. Well, we're repeating ourselves a lot. Yeah, but it's like candlestick charts are very actually simple. You just gotta memorize, or you don't even have to memorize. You just have always on you like a spreadsheet, save it on your computer to understand. Like when you see a pattern when you're analyzing a chart, you understand what you're doing. You understand that like this could actually indicate a bullish or a bearish movement. It could help you navigate the market better and make profit better with lower risks. Now, let's talk about the on neck line, which is our last pattern that we're going to be talking about today. And we have two different types. We have a bullish kind and a bearish kind. Let's start with the bullish kind. Notice how we are having an uptrend right here. We start with a strong bullish candle and a gap. Remember, this is also one of the Tusaki family. After the gap, we have a small bearish candle, which basically indicates that the market is going up. The bears, tried to gain control of the market, but they couldn't be allowed to drop below the previous day. So this indicates that the market is going up. So okay, and the last one is called the on neckline as well, but it's going to be in a bearish trend. Notice how the trend is going down. We have a strong bearish candle right here, then a gap here, then we have a small bullish candle. It's the same thing here. Like the bulls tried to reverse the market to go up, but they couldn't actually cross where the previous day actually closed. So this basically indicates that the buyers' power are still not enough to actually cause a reversal in the market, which basically what causes the continuation to happen. And that's everything you need to know about candlestick chart continuation pattern. I hope you learned something here today. If you have any question, please remember to ask. Don't hesitate at all. I'm always 24/7 available to help you with your questions. And I hope you enjoyed it. And thank you all. Don't forget the like button. See you guys next time.